All right. Good afternoon, everyone. We're going to go on ahead and get started here. Hopefully, we'll have some more people joining us in just a little bit, probably. I think people are just running late today. Well, just first, thank you all for attending today's webinar on negotiating your lease, things that you should know when it's time to do that. My name is Kyle Cram, and I'm with the City of Seguin's Main Street and Convention and Visitors Bureau. We oversee our downtown and tourism departments, and then this event is also being co-hosted by the Seguin Economic Development Corporation, who works with manufacturers and businesses of all types and all sizes to provide a variety of services. So both of our departments are here to assist Seguin businesses any way that is needed. If we don't know the answer, we probably know the resources to send you to the right location. In addition to the services we provide, we also have the small business counselor who comes into Seguin every Tuesday. His name is Larry New. Right now he is doing virtual meetings, but you can meet with him for free one-on-one to discuss any issue that you're having with your business, whether it be employment, getting started, expansion, things like that. And so to take advantage with him, just reach out to us and we will give you his contact information. Our webinar series would not be possible without the help, without our sponsors, and they include GVC and Anders Pierce Realty. So we thank both of those businesses for sponsoring our webinar series. We are recording the webinar today, so if you are missing something or you want to rewatch it, be sure to, we'll be sending out that recording to y'all later today. And then also, if you have any questions throughout the webinar, feel free to type them into the chat box or the Q&A, and we will address the answer, get those questions answered at the end of the presentation. That leads us to introducing today's speakers. They are Marcelino Garcia he is a broker associate with Keller Williams Commercial, and he's a graduate of the University of Texas at Austin. His extensive commercial real estate experience has been developed through his involvement with CCIM and his CRE practice in the San Antonio and Texas markets. As a CRE generalist, he works with U.S. and foreign-born investors, sellers, and tenants focused on retail, office, industrial, and land development. In addition, Mr. Garcia and his associate Leslie Ayala, a CRE Specialist, are in their 8th year conducting a CRE training workshop at UTSA Small Business Development Center. They are both fluent in English and Spanish. So I'm going to turn it over to Mr. Garcia and stop sharing my screen so he can start sharing his.
Good morning. How are you guys doing? Hopefully you're doing well on this this beautiful day, actually a beautiful hot day. Oh, there's the slides. Thank you so much. I wanted to get a chance to get started. As was mentioned, we've been teaching at UTSA downtown campus for the last 8 years. And so we want to share a little bit about this. Actually, we do a full presentation on commercial real estate at UTSA, and we've carved this one out because we were asked to do something on negotiating commercial leases. And I think it's really, really important that we have the opportunity to dive into this and dissect it a little bit more. We work for Keller Williams, or KW Commercial. And Keller Williams, as most of you probably know, is the largest real estate company, not only in the San Antonio metropolitan area, but in Texas and in the world. The commercial division for Keller Williams in the San Antonio metropolitan area, or the San Antonio MSA, was the second largest last year, behind CB Richard Ellis. A lot of people don't know that, but we stay very, very active in what we do. As I mentioned, Leslie Ayala is also with me, and so she will be conducting part of the workshop. And so we can go to the next slide. Leslie's my associate. She's been with me for about 5 years. She's an incredibly bright young lady. She has a real estate finance from the University of Texas in San Antonio. And so she actually trained in this and then came to work with me as an intern many years ago, and is as fluent as I could possibly ever be in commercial real estate. I've been doing commercial real estate for about 11 years now, and teaching here for about 8 years. We are generalist. We do touch on a little bit of everything from buying to selling to representing tenants to representing landlords. So when it comes to commercial leases, we're extremely well versed in dealing with that. In fact, I just had a residential agent walk in my office a few minutes ago and said, well, what's the difference between a residential lease and a commercial lease? There's quite a bit that we're going to talk about today. So let's go ahead and move forward.
So we're going to cover about 8 different objectives throughout the course of this webinar, and all of these objectives are key in being able to negotiate your lease. Some of the things that we're going to go over is conditions for negotiating a lease, and we're going to go over commercial terminology that will be crucial for your understanding when you start negotiating a lease. There are different types of commercial leases that exist, so we're going to go over those and give you a better understanding of what triple nets are, triple net leases, and how those are calculated. We will also review the process and timeline required in order to be able to lease a commercial real estate space. And we're going to talk about the responsibilities of both the tenant and the landlord. The 7th bullet point is we're going to talk about knowing the value of utilizing a letter of intent to negotiate a lease contract and the terms that go into that. And lastly, what may be negotiable in a lease agreement.
As Leslie mentioned, these are quite a few objectives, but they all tie in into what we're going to be doing as far as a commercial lease goes today. So, go ahead, Les. When we look at negotiating a lease, there are certain conditions that exist on the market. And when you look at a space, regardless of what that space is, the first and most important part about the conditions for negotiating is how long has that property been on the market? It has a lot to do with the willingness of someone to negotiate. They also need to know is what is the market area that you're looking at. For example, Seguin, downtown Seguin could be very different than along I-10. Retail could be very different than an office. Industrial space could be very different than some other kind of property. So the market area that you're in has a lot to do with what rents are going to be commanded in that area. Economic outlook for the area also is very important. If you notice the San Antonio MSA, in which Guadalupe, Comal, Wilson, Pierre all fall into, the economic outlook for our area has been extremely, extremely good. If you look at the housing market, commercial real estate doesn't grow unless the residential market grows. The residential market is doing extremely well. Even though we've gone through this COVID period, I can tell you that in our office, things have not slowed down. And part of the reason it didn't slow down was because we were deemed essential workers. And so we've been doing as much as we can in the safest way possible. What I have noticed in the commercial market is that for the last 4 weeks, the commercial market has absolutely just taken off. Like I said, the residential market was doing very well. But we slowed down from a commercial standpoint for the month of April and May. And once we hit the 2nd week of June, all of a sudden, the phones haven't stopped ringing. And we are doing a lot more property tours than we were doing before. And we got a lot of investors coming in as they were before the COVID. The area lease rates are also very important. It's important that an analysis be done or a comparable be done for what are the lease rates for that particular type of space that you're looking at. The other condition for negotiating is the landlord. This is probably one of the key ones that one must know. Anytime you're negotiating anything, you certainly should know who's across the table. Landlord and their priorities are really important. If you're looking at a major center that may be owned by an out-of-state landlord, the chances or the opportunities for them to want to negotiate are less because not only do they own that, they probably own a lot of other spaces. If you start getting into the larger retail spaces, let me give you an example, such as La Cantera here in San Antonio, the Rim, North Star Mall. Those are owned by either corporations or real estate investment trusts. And so they can sit on properties a lot longer. And so it's important to know who the landlords are, what their priorities are. You know, are they in a position where they really need to lease this out? And so it's important to know what that condition is. The condition of the property has a lot to do with it. A lot of times some properties are in good conditions. Example, we have a couple of properties that we have listed right now for lease. And we make sure that landlord keeps everything clean, that everything's been cleaned up. It's just a question of a little bit of investment into it, but the property is in good condition. Where you go into other properties in different parts of town or different locations where the landlord hasn't put anything into the property, many times those landlords are local. And so the property may be in poor condition that the tenant yourselves have a lot of work to do there. So your condition for negotiating becomes much greater or better for you at that time. And also the terms of the lease, whether you're leasing or you're purchasing, are you looking to do a 1 year, 2 year, 3 year, 5 year, or even a 10-year lease? These standard leases in our area tend to be from 3 to 5 years. Usually when we find that if a landlord is willing to do 1 or 2 year leases, many times it's because they are in a position where they really, really need to lease a space for income purposes. So, but anyway, we need to be sure that we're clear on what those conditions for negotiating are in the market.
So a little bit about the key terminology that we will go over today. All of these terminology points are very important to keep in mind when you're negotiating a lease, and it'll help you understand what's written in your lease. The first thing that we're going to go over is a letter of intent, and this is a non-binding agreement that basically spells out all the terms that will be written in a lease. We're going to go over lease types. Like we mentioned at the beginning, one of them is a triple net lease. There are 4 other different types of leases that we will go over. The execution date, so this is important. The execution date is when you sign your contract. The commencement date is when your lease actually begins. And those are 2 very important dates because there may be a build out period involved, which we will go over. The lease terms, like Marcelino said, most typical leases are anywhere from 3 to 5 years. So the contract will spell out how long your lease is. We'll talk about abated rent. So this is what most people know as free rent and how that is worked into a lease. We'll talk about escalations or bumps. So the rent most likely goes up every year, and we'll talk about that as well. The demised premise spelled out in the lease will tell you how much square footage you are actually renting, and it'll be spelled out on your lease. We'll go over common area maintenance, and this is the taxes, insurance, and common area maintenance is all included in the triple nets, which we'll explain. And then triple net improvements. This is an allowance that is usually given to a tenant in order to make any improvements into the space. And finally, a lease guarantee. This is very important to landlords. They want to make sure that there is a personal guarantee on the lease in the event that the lease is terminated. So we'll go over all of these throughout the course of the webinar. So let's talk a little bit about the type of leases. Like I mentioned, there are 5 different types of leases. The first one is a full service lease. These are usually seen on the older commercial centers, whether it be retail or office. And the way the lease is spelled out, it basically says that with your rent, they're putting the pass-through expenses into that rate. So taxes, insurance, and maintenance for the property has all been enrolled in to the price of your rent. Every now and then, the tenant will be responsible for utilities. Just depends on how that is laid out on the meters. Usually the tenant will be responsible for their own electric meter.
And I think in this part right here, when we talk about a full service lease, or sometimes they're called gross leases, when you get into the contract, it's important that you review that closely, because in the contract, most of the time it'll say that even though it's a flat rate, let's assume that you're paying $2,000 for your rent or $3,000 for your rent. In the contract, it'll say that if the county raises the taxes on the landlord, he has a right to raise it on you, okay? Or, his insurance goes up, or his common area maintenance goes up. He then has a right, even though you've signed a lease that says, I'm paying $3,000 for the next 2 years, many times in that contract, and that's some of that hidden language that you have to look for. But we'll talk a little bit more about how to manage that part. Okay.
The next type of lease is a modified lease. So when you read your lease, it'll tell you what your base rent is per square foot. They may be charging you a portion of the taxes, a portion of the insurance, but you will definitely be paying the utilities for your space. The third lease is the most common type of lease that is out there. It's a triple net lease. What this means is you're paying your base rent, the landlord is charging you those pass-through expenses of the taxes, insurance, and common area maintenance. And common area maintenance could be maintaining the elevators, maintaining the exterior parking, exterior lights, and trash. And you will definitely be paying for utilities. The fourth type of lease is an OPEX lease or an operating expense lease. You'll be charged a base rent, taxes, insurance, and common area maintenance. You'll be paying for your utilities, and these properties may be set up in an association. It could be an office association, and those association fees will be passed through to the tenant as well. The last lease is a triple net lease and percentage rent. These are most common on those large shopping centers like La Cantera or the Rim, where they charge you rent, portion of the taxes, insurance, and common area maintenance cost. You'll be paying for utilities, any association fees, and a percentage rent. So an example of this, the lease may say if you exceed 100,000 gross sales, the landlord is now able to charge you a 6% rent on top of any of the sales that exceed that limit.
Just to point out that when you look at OPEX and also the last one, percentage rent, one of the items that's missing off of here is a lot of times they will also roll in the management fee. Example, if the landlord has hired a management company to run the property for them, they may also charge the management fee back to the tenant on a percentage, on a pro rata share. Go ahead, Les. We're going to talk a little bit about triple net leases, and the only reason we do this is because we're finding that a lot more landlords are going to the triple net lease. They're taking the responsibility of property taxes, insurance, and common area maintenance away from themselves and passing it through to the tenant. So I think it's important that you know what a triple net lease is and how it's applied here. Example of a strip center, and also may help you with negotiating. This is a sample of a strip center with 8 different spaces in it, and you can tell by the list of what some of those spaces are, and some of them are vacant. But here's something that's interesting when you're looking at a space. If you look at number one is what we call an end cap. Number 8 is also called an end cap. Everything in the middle is called an infill, okay? When you're leasing an end cap, like number 1 or number 8, for the most part, you're gonna pay more rent because you got all the visibility. When you're leasing an infill, your rent should be lower. You should be looking to negotiate a lower rate because you don't have the visibility. That's why it makes sense to go in a strip center that's in a straight line versus one that's shaped this way. But again, if you're in the infill, your lease rate should be lower because you don't have the same kind of visibility that number 1 has. So that's something that you should be aware of. Now let's talk about how triple nets apply to these. I've outlined each one of the spaces that you just saw, and the number 1 is 4,000 square feet, and they occupy approximately 16.9%. Okay, the total building is 23,000 square feet, 23,600. If you look at the owner's expenses, it costs the owner $75,000 in taxes, $20,000 in insurance, and about $25,000 in common area maintenance. Common area maintenance is keeping the parking lot clean, blacktopping it on occasion, the lighting, the exterior lighting, the trash cans on the outside. And so that's your common area maintenance, and he's paying $25,000. What the owner looks to do then with a triple net lease is to pass it on. So let's assume that his total is $75,000. You take the $75,000 in taxes and you divide it by the square feet, which is 23,600. The taxes then are $3.18 per square foot per year for the entire center, or 26 cents per square foot per month for the entire center. The same thing is done with the insurance, same thing is done with the common area maintenance. So the total triple nets for the property per year are $5.09 per square foot. On a monthly basis, it's 42 cents. This is what the landlord will pass on to the tenant. I'll give you an example on the next line. Let's assume that you're renting 1,500 square feet, which is the very top, and you're renting base rent plus the triple nets. That's what the 3 N's stand for, okay? You take the rent, which is $18 a square foot per year, and the triple nets are $5.09 per year. Sorry, I didn't switch it. That's 2,000 times 2,000 square feet. Your total rent for the year is $36,000. Your triple nets for the year are $10,180. So your total rent and triple nets for the year is going to be $46,180. If you look at the table that's right below that, all I did was break it down into a monthly basis. So the monthly rent plus triple nets for the tenant for a space of 2,000 square feet would be $3,840. So that just kind of gives you an idea. Now, the important thing is that once you have a triple net, it's rare that a landlord is going to negotiate on them, because they're fixed, they're pass-throughs. They don't make any profit on it. They just pass it on to you exactly as it is. When you have a lease, the lease will say, you occupy 2,000 square feet, and this 2,000 square feet makes up X percentage of the property. So in a lease, these triple nets should be broken down for the property that you're occupying. And so, like I said, the triple nets are non-negotiable. I'll give you another example though. We just picked up a property at the St. Paul Square, right downtown San Antonio, this week for lease. And it's just a little bit under 3,000 square feet. We listed it as a triple net. However, okay, because the rent is so high, we're having it at $24 a square foot. The owner may be willing to do a modified net lease. In other words, they pay rent, and instead of having them pay the triple net, he'll have them pay just the taxes. But he's willing to do that to get an extremely strong tenant into the building. But that's not something that we're advertising, but that's what we're willing to do.
Now, another thing to remember on triple nets, because taxes increase every year, and as well as the insurance, the triple net charges will fluctuate every year. As a tenant, you do have the right to request the tax and the insurance bills, just to make sure that the costs are being passed through correctly, but those triple nets will fluctuate every year.
Also note that when your contract is written up, in the contract, it should say that, for example, when we go into 2021, the landlord has, let's say, until the end of February to reconcile his taxes, his insurance, and common area, to make sure that they either have changed or have not changed, and to provide you those changes. You need to be able to see those to make sure that if he's increasing the rent, why he's increasing it. So you have the right to look at all that information before you get charged with it. This is an office building, and the office building, this is why it's interesting. If you looked at the part that's leased, that's occupied by 60%, and then the management office has 19%, and then the other part is 21%. You notice that on the bottom of the picture, or bottom of the screen, you have floor 1, and you have 21,500 total square feet. That's the entire building, okay? And the difference between total square feet and usable square feet is the wall. The 2150 measures the building on the exterior. The 1950 measures the building on the inside of the walls. When you're signing a lease, you always want to try and negotiate a usable square footage versus a total. I know that when I represent landlords, we're negotiating the total, because we want to make sure that the landlord gets paid for the entire building. When you're a tenant, you want to try and negotiate on a usable square footage, because it's less square footage, therefore the rent is lower.
So let's talk a little bit about the leasing timeline and the time that it takes in order to be able to find a space and finally write up a lease. And this is very important because there's a lot of different factors that go into negotiating a lease. The first one is a needs analysis, and this can take anywhere from 1 to 2 weeks. This is the step number 1, where we highly recommend that you as a tenant have representation to help you not only to do your search, but also go through that whole negotiating process with you.
And the important part in this area is, give you an example. If you're driving down the street and you see a sign posted on a building that you're interested in, or a space that you're interested in, please note that the name on that sign has a fiduciary duty to the landlord, not to you. They're not your representatives. They're not there to advise you. They are there to represent the landlord. So for that reason, it's important that you have representation that'll guide you through this process, because it can get pretty in depth and there's a lot of moving parts, and the agent representing the landlord will give you some assistance, but there's a lot of things they won't divulge with you or share with you. And you need to have somebody that's going to look out after your interests.
So once a needs analysis has been conducted and the area that you'd like to be in has been selected, as well as the type of property and square footage that you need, then we move on to step number 2, which is a search, tours, and then obviously site acquisition. And this can take anywhere from 30 to 60 days, just depending on the availability of these properties. Point number 3 is lease negotiation. This can take anywhere from 2 to 6 weeks. We always start with a letter of intent. Like we mentioned at the beginning, this is a non-binding written agreement that lets you know all the different terms that you as a tenant are willing to present to a landlord to lease a space. Point number 4 is lease review, and that can take anywhere from 2 to 4 weeks. So once those lease negotiations have taken place, terms have been agreed upon, everything on that LOI will then be transposed into a lease agreement.
Leslie, if I could interrupt here. Let's go back to the letter of intent. When we teach the class at UTSA, we have an informal test at the beginning of the class. And one of the questions that we ask is, should you have an attorney negotiate a contract for you? And the short answer is, it is up to you. As real estate agents, brokers, we cannot practice law. We can advise you on terms, we can advise you on conditions, we can talk about the ins and outs of it. But when it comes to the legalese, we don't have that right. However, what we do is we use a letter of intent to negotiate everything, because, well, we get all the detail down without having to go through an attorney first. Once the contract is written up, then you have every right to take the contract to an attorney and have an attorney review. But with a letter of intent, we tend to do the negotiating with the other broker and the owner, or vice versa. But it's important that you understand where a letter of intent falls as opposed to a contract, as opposed to a lawyer, and where we position ourselves and where we work. Lawyers are really important in the process. If you want to take your contract to an attorney, we certainly recommend that. But we always start with a letter of intent first and foremost.
And to Marcelino's point on the lease review, that can take anywhere from 2 to 4 weeks. Depending on the landlord and who is representing the landlord is the type of lease document that you can get. Us as commercial real estate agents, we utilize the Texas Realtors Association forms. So we fill in the blanks with all of those terms that have been negotiated. If it's a large national landlord, you may see a attorney drawn contract, and those can range anywhere from 40 to 60 pages. So like Marcelino says, we cannot practice law. We can let you know the terms that are in that contract, but we cannot go into detail of all that has been written on there. Number 5, space planning and drawing can take anywhere to 2 to 4 weeks. So unlike when you're looking to purchase a house and it has everything that you need and the rooms are laid out correctly, a commercial real estate space is not that way. It is very rare that you find a second generation space that's ready for you to move in without modifications being needed. So this is the timeline that you would use to sit down with an architect and obtain any sort of space drawings that the landlord would need to approve for any modifications that you would be making to the space, whether it be adding a room or removing walls. Number 6 is the tenant improvement period and permitting. This can take 40 to 60 days. So one of the things that we mentioned at the beginning is your commencement date and your effective date. When you sign a contract, that is considered your executed date. When your lease starts, that's your commencement date. We always try and negotiate where our tenants are not paying rent during the time that they're making any sort of improvements to the property. And that is very crucial because obviously a lot of investment is going into making modifications to that space. This can range from 40 to 60 days.
If you look at point 5 and 6, these are really important in your letter of intent because you really have to build this in and spell it out. as to how much time you're going to need. Like Leslie was saying, that build out period should be a grace period, for lack of a better word. I've seen people say, well, I've got, 2 months of free rent, and come to find out that's actually the grace period. That's not free rent. That is, in our industry, a standard. If you're using 30 days, 45 days, or 60 days to build it out, there is no rent involved in that. And there is no, when somebody says, well, it's a free period, well, it's a build out period, is what we call it. And that has to be spelled out in your letter of intent before you go to contract.
And because most spaces require improvements, a new certificate of occupancy usually needs to be issued. Once your certificate of occupancy is issued, that is when your commencement date on your lease begins. So if any abated rent or free rent was negotiated, that should start right after you obtain your C of O and your lease actually commences.
We're currently working on a contract with a large medical group across the state of Texas, and they're going to be making modifications to the space. We represent the landlord. So they were pushing pretty hard for my landlord to do the modification, pay for the modifications, pay for the changes, and asking for 4 months of free rent. We pushed back, and because the space is almost in perfect condition, the modifications are not something that we're looking to do. In fact, if somebody was using that space for another purpose, they wouldn't have to make any changes, but they need to put up a couple of walls for privacy reasons and some other things. So we pushed back and said, no, we'll give you the 4 months of rent, free rent. However, you have to make the modifications. And this is the way we'll give you the free rent. They said, we're willing to do, initially we pushed back and said, we're only do 2 months. They said, we're willing to do a 7-year lease. So we said, if you give us the 4 months. We decided to give them the 4 months. However, we're doing 2 months in the front end, and at the end of, or the beginning of year 2, we'll give them 2 more months free rent. And they say, okay, we'll work that out. So there's different ways of skinning the cat, as they say, but I think that the important thing is that we can arrive at something. Sometimes we have to look at it a little bit differently, but we can get there.
Before we move on to the next slide, Kyle, are there any questions?
Yes, there is. Can you explain what a tenant improvement allowance is?
Yes.
Great question. Leslie, go ahead.
So the tenant improvement allowance, like we mentioned, the space may not necessarily be fit for your needs, and modifications may need to be made. A landlord will usually grant an allowance to the tenant to cover the cost of the improvements. Now, the improvement allowance will not cover the full extent of those improvements. They could range anywhere from $10 a square foot to over $40 a square foot, just depending on the current condition of the space. To give you an example, we have a property listed for lease. It is completely cold shell, meaning that we only have the 4 exterior walls. The tenant will have to do the complete finish out on the inside, and that can range anywhere from $120 to $140 a square foot. In this case, the landlord is willing to provide them $40 a square foot to cover a portion of their finish out expenses.
Now, the way that tenant improvements are usually paid out is they're usually paid out at the end of the construction that's being done on the property. So let's assume that you're leasing a space of 1,000 square feet, and the landlord has agreed up front that he's going to give you, I don't know, $10 a square foot for those 1,000, okay? You would then come up with the plans to make the changes, submit those plans to the owner. The owner approves it. You hire your own contractors. If you have to hire an architect, you hire your own architect, and you get those changes made. Once those changes are made, you pay for those, you pay for it, and then you take your receipts and you give them to the landlord and say, look, this is how much it costs me, you know, and the landlord will reimburse you $10 a square foot for whatever you spent. There's several ways that they can reimburse you. One, they can write you a check for the amount. Number 2, they can credit your rent, and so, or abate your rent, let's say. They can reduce it off your rent. It's a better word. And that way, they compensate you for that amount. Keep in mind that when a property is being advertised, it's always important to ask, particularly if you plan on making modifications, if there's any tenant improvement allowance for the space and how much. We base it on what the improvement, what the property's like. The property that Leslie's talking about is a medical condo. That's what we call in cold shell. Nothing in it except the studs, the floors, concrete floors, but nothing else in it. We anticipate there's going to be a medical client in there sometime, medical tenant. Because we want to make sure, and the standard around the San Antonio metropolitan area for a space that's in cold shell is $25 a square foot. That's the standard. We are actually offering 40 because we really want a tenant in there, a well-capitalized tenant. So we're offering more than what the going rate is. We have another space that's in cold shell. It already has the heating, air conditioning in it, all the plumbing, the restrooms, the walls have been painted, the floors are clean, new lighting has been put in, ceiling tiles are in place. We just got, we've gotten several letters of intent, one from Marco's Pizza and one from somebody else, and they were asking for the moon as far as tenant improvements. We're not willing to put, my landlord's not willing to put a penny into it because it already has all the major plumbing, all the major things. Anything that they do would be to help their business or to modify it for their business. And so my client is saying, no, that's on them. But again, anytime you go into a space, make sure you ask if there's any tenant improvement allowance associated with the space and how much is it per square foot. Okay.
So let's talk about tenant responsibilities. In a lease, a tenant is responsible for various different things. The first one is interior janitorial maintenance. It's very rare that you find a space where the landlord is willing to pay for your janitorial expenses. So that is a tenant's responsibility. The second is any interior repairs. This includes windows, doors, your ceiling tiles, plumbing, electrical. So any repairs that need to be made within your space, more than likely it'll be your responsibility. And that's why it's very important to look at the way the lease is written. The third point is HVAC maintenance and or repairs. This is a very expensive line item if something were to happen with the HVAC unit. What we usually do when we represent a tenant is make sure that they are responsible for maintaining a service contract, a company that'll go out and replace the filters on a consistent basis to make sure that unit is running. And if for some reason large repairs need to be made, our tenant would be responsible for paying X amount, usually $500. Anything that exceeds that amount, the landlord would have to pay. And that's why it's very important to have good representation to help you negotiate these points. Bullet point number 4, the installation of any exterior business signage. So if you would like to place a sign on the facade of the building, or if they have a pylon sign or signage on your door, the cost of that installation would be the tenant's responsibility. Like we just talked about, the cost for the majority of the space modification is on the tenant. Sometimes a tenant improvement allowance is granted, but it never covers the full cost of those modifications. Tenants will also be responsible for maintaining a property liability insurance, usually in the amount of $1 million, and maintaining business interruption insurance. In the event of a natural disaster or fire happens in the property and your business is interrupted, the business interruption insurance would kick in and help you cover your monthly rent.
With the landlord, they have certain responsibilities, and keep in mind that all these are spelled out or should be spelled out in the contract once you sign it. But anything to do with the exterior of the building, cracks in the wall, anything that has to do cosmetically with the building is certainly the responsibility of the landlord. Foundation, repair, or any kind of damage, repairs, any kind of roof leaks, anything like that is the responsibility of the landlord. I had a client over at the Quarry Village, and several years ago was a serious rain, and he sprung a leak in the ceiling, and it was a very expensive jewelry store, and it leaked down and it damaged all his cabinets, jewelry, displays, and things like that. He had it repaired, and he filed an insurance claim, got it fixed. Same thing happened again, another leak, another damage. He was such a nice guy that I told him that he probably had a claim against the owner's insurance for his property. Unfortunately, he never did anything about it. He said he wanted to be a good tenant, but I think he had every right to go back to the landlord and to the landlord's insurance to help him cover instead of having to file his own insurance claim. But anything to do with the ceiling or the roof, I'm sorry, and the foundation is certainly the responsibility of the landlord. Common area maintenance, if you're in a building that's got elevators, certainly they're responsible for it. Parking lot, exterior lighting, any kind of signage on the outside, monument signs or pylon signs, any damage to that is important that the landlord cover. And here's a couple of things that are important for you. When you look at who's responsible for what, leases for commercial real estate are very different from leases from residential. What happens in residential is that there are so many consumer protection laws that a landlord's responsible carries a lot more responsibility in a residential property. Water heater goes out, call the landlord. Plumbing goes out, you call the landlord. Air conditioning goes out, you call the landlord. In commercial real estate, what you occupy between the walls is the tenant's responsibility. Plumbing goes out, you fix it. Air conditioning goes out, you fix it. And so everything between those walls is a tenant responsibility. The government assumes that because you're in business, you know better. So you don't have the same consumer protection laws that you would have on the residential side. So it's important to be aware that everything in those walls are your responsibility. And so, you know, every once in a while we'll have a tenant call one of our landlords and he's gone, no, look at your contract. Okay, and it's all spelled out in the contract. It's actually in the Texas Association of Realtors contract, it's actually check boxes that says who's responsible.
So let's talk a little bit about a letter of intent. Like we mentioned at the beginning, it's a non-binding agreement, but it's an informal way of starting the formal process. So like Marcelino says, this is a document that we utilize that will let us know who the parties are, their information, the property information, the property we're looking to lease, the space that we're looking to lease, how big it is, key contract dates, when we're looking to start the contract, when it will expire, the terms of the lease. So this could be the length of the lease, whether it be 3 to 5 years, how much abated rent we're getting, the grace period that we're asking for the build out. We also spell out the rents and the expenses. And important to note on commercial leases, it is very rare that leases stay flat for the course of the lease. Most of the time there's increases on a yearly basis. Every now and then we can negotiate where the lease stays flat for 2 years and increases on the third. So that's very important to note when your lease increases and by how much. The triple net expenses that we talked about, those increase as well on a yearly basis. The first year will be spelled out on your lease. After that, the lease agreement should spell out by when the landlord has to give you a reconciliation of those expenses and notify you if the triple net expenses went up or went down. The letter of intent will also outline the tenant improvement allowance that we are requesting or the tenant improvement allowance that the landlord is granting. And finally, like we mentioned, it is a non-binding agreement. So this is not your contract. It's just an informal way of us negotiating all the terms that will later be transposed into a contract.
Go ahead.
Talk about leasing negotiation. So tips for negotiating a lease. The first one, all agreements must be in writing. And this is very important, especially when something happens in the lease. The last thing you want to do is say, well, over the phone, you let me know that you would cover it. Everything must be in writing to protect you as a tenant and of course the landlord. You must have your financial information in order. This is very important, especially depending on the type of landlord that you're dealing with. If it's a large national company, they will require extensive financial information in order to lease a space to you. This is all part of their due diligence process when they request a lease application. In our case, we always request a lease application and one of 3 things, either the taxes for the last 2 years, your profit and loss statement for your business if you're currently operating, or bank statements. And when we talk about bank statements, it is very important that those funds be in a US bank. And that is very crucial for most landlords. Number 3, research comparable rents in the area. And the easiest way of doing this is calling your broker who's representing you. They will have a better understanding of what the rental rates are in the area that you're currently looking for. Alternatively, you can try and search them online. However, the tools that are used for commercial real estate are through a subscription basis. So it's very difficult for you to be able to get a full understanding of what is those rents in the area that you're looking at. Point number 4, evaluate the terms and length of the lease. So like we mentioned before, the longer the lease, the easier it is to negotiate different points. So typical leases run from 3 to 5 years, sorry. And the longer the lease, like the example Marcelino gave you, the more ability that we have to request on abated rent or tenant improvement allowance. Look out for hidden costs. This is very important. Like we mentioned, triple nets increase. On a full service lease, those costs are passed through and rolled into your rent. However, because those increase, even if your rent says it'll be $3,000 for a year, if you're on a full service lease, that will change annually because taxes increase. Another point or another example on this, we had a client looking at a property to purchase. When we were analyzing the leases, the landlord was utilizing the security deposit for his tenants to cover any repairs that were needed for the property. Now, whether or not that was written out on the lease, that's to be determined. However, you want to make sure that you read every single paragraph closely to make sure where your money is going. You also want to ask for a favorable tenant clause. Like we mentioned before, there's very little consumer protection for you as a tenant in commercial property. And most leases are written in a way to protect the landlord. However, when you're negotiating a lease, you want to make sure that there's clauses in there that protect you in the event that you want to sublease your space to another company, or like the last bullet point says, a termination clause. In a Texas Association of Realtors form, there is not a single paragraph in there that allows for a tenant to terminate the contract early. The same thing applies for attorney drafted contracts. It's very rare that a landlord's attorney will add it on there. However, that's a point that you may want to think about and have it negotiated in there. There obviously will be a cost for you to be able to terminate your lease, and that has to be negotiated directly with the landlord.
When we look at, this is yours, isn't it? Go back.
Sorry, we skipped through a slide too fast.
When we look at what is it that we can negotiate off a lease, and I think we're looking at the terms of the lease. As we said, 3 years versus 5 years. I've got a small owner who owns 2 buildings, both industrial, and he would like to have a 3-year lease, but would love to have a 5-year lease for his tenants. However, things that were slow during the COVID period, so he was willing to take a 2-year lease just to get a tenant in there. In addition, he was willing to give away some free rent on it. But the term of the lease, like I said, it's important to know who is on the other side, who the landlord is. And that's what a good broker representative will do for you, is ask those questions of the other broker or even of the owner and try and get as much inside information as they can to give them a better position to be able to negotiate. The amount of the lease. And I think this is really important because most people try and stay within a market price. Most landlords do, or most agents do. And it's important that when you're looking to negotiate an amount off a lease, you're going to probably be able to negotiate anything between 50 cents to maybe $2 off the price per square foot. But I know that I've had people say, well, things are really bad. I want $5 off. It's like, nobody's going to give you $5 off. They're rather sit on it, because they're definitely at a loss. But you can always negotiate, and you should always negotiate off the price. But just note that, the price, the negotiation is not going to be dramatic, but you can and you should. The graduated rate for a lease, let's assume that you have a 3-year lease. We normally put in graduated amounts of 50 cents per square foot per year. So at 1 year, will start at $12 a square foot. The next year or two, it'll be at $2.50. A year 3, it'll be $13 a square foot, okay? If I'm representing the tenant, I'm gonna ask for 3 years flat. I'm gonna ask for $12 for 3 years. Or I'm gonna ask for year 1 and 2 to be flat at $12 and then year 3 be $12.50. What the landlord is trying to do with the graduated rates is to cover himself against inflation, because inflation is going to grow. So he's making sure that he's covering himself by increasing the rent. What you want to do as a tenant is you want to keep it flat. Not only do you want to negotiate it down, but you also want to keep it flat. And so that's important in looking at this. Lease deposit you can negotiate, and you can negotiate it from the standpoint. Some landlords will ask you for the first month's full rent. Some will ask you for the last month's full rent. So if you have a graduated bumps in your lease, the last month's rent is going to be much higher than the first month's. So, you know, you can negotiate that. I've never seen somebody say, well, I don't need a deposit. Everybody's going to ask you for a deposit. It's just the amount that they ask for, okay? Space location. As I mentioned before, the inline spaces should be worth less than the end caps. So make sure you're aware of that when you're looking at it, particularly if you're in an L-shaped space. Now, if you're in an inline where everything is facing the street, it's going to be a little bit different. End caps are still worth a little bit more than the infills are because you have better access to them. But keep in mind that anything in inline is should be a little bit lower. Tenant improvements, again, make sure that you ask up front whether there's any tenant improvement allowance associated with it. How much is there per square foot? Pylon signage. Most landlords do not charge for you putting your sign out in the front on a marquee or on a pylon or anything like that. There are a few places they do. If you go on 1604, for example, here in San Antonio, north part of 1604, anywhere near Wild Fish or those places, all those landlords charge for you to put your sign up front. It's a monthly charge. And I can't remember how much it is, but anyway, that can be negotiated also. For a smaller tenant, if a landlord says that they'll charge you for pylon sign, I would say no, absolutely not. The HVAC and the HVAC maintenance is probably the most important one for negotiating for you guys, because if you're a small business owner and the HVAC goes out, that could cost you a year's of gains in your business. And so as Leslie said, you always want to put a stopgap. You know, you'll pay up to $500 a year. And if we represent the tenant, we always put this in there, pay up to $500 a year. And anything above that, including replacement, is the landlord's responsibility. I've seen some leases out there. There's such a thing as an absolute triple net, where the tenant is responsible for everything, including the roof, the foundation, the HVAC. So anything happens, the parking lot, anything happens on there, the tenant pays for it. And so again, that can get really costly. So you always want to make sure that you negotiate that HVAC where you have a ceiling on to how much you're going to pay per year, because again, that goes out on you, it's going to cost you. So we talked about the conditions, and we're getting ready to wrap up. We talked about the conditions with one of the first slides we talked about. I think in the conditions for negotiating, the market area has a lot to do with how well you can negotiate for the space, and the landlord and their priorities. I mean, if you have to take all these points into consideration, I think those are the two most important areas to focus on, is what is the market area telling you, and who's the landlord, and what are their priorities in moving forward as far as signing a lease with someone. And with that, we are at the end of the presentation. Any questions?
We do have one question. That is, what is a good online resource for researching comparables?
So like I mentioned during the presentation, we use various different tools. Most of the commercial properties are listed on CoStar, LoopNet, and CREXI. All of these require a subscription. LoopNet is the only one where you, as a tenant, can log in without a subscription. However, the downside to that is you will not be able to see all the properties that are available. on that site.
So in general, it's real difficult for someone. And like Leslie said, the ones that show up on LoopNet is where the agent is willing to pay extra for the public to be able to see it. That extra costs the agent about $55 a month per listing. So if somebody has 10 listings, you know, do the math as to how much it costs them per month in order for the public to be able to see it. So you will see some, you won't see all of them. And so it's real difficult to find a source that gives you all that information. And that's where commercial real estate is so different than the residential part. The commercial vendors, for lack of a better word, databases, have really monopolized this quite a bit, that anything they put out in the market, they charge us very heavily for. And I think that's part of the reason that a lot of residential agents, once they figure out the cost that goes into doing commercial real estate, they said, no, that's not what I want to do. So that was an answer, but unfortunately, there's not a lot of tools out there for the public.
Yeah. Did have a question on the triple net, for the common area maintenance. Are you paying for all the maintenance done over the last year, or are you paying the anticipated maintenance for the upcoming year?
So the common area maintenance charges, you will obviously utilize the previous year's expenses to calculate that. Sometimes you will have service contracts and they'll tell you this is our increase on the following year. And like we said, those will be updated every year and reconciled at the beginning of the year. But usually it's calculated based on the previous year, simply because they don't have the full updated expenses.
And I think it's important to have a conversation with the agent and with the landlord and say, often do you protest your taxes? Because a good landlord always has their attorney protesting their taxes, because they know that the more pass-through expenses they have, or the more triple net expenses they have, the less likely it is that they're going to attract a tenant, I'm sorry. And so a good landlord will always fight the taxes and the insurance as much as possible, because it's important for them to keep that down, because, you know, adding 10 cents per square foot to a space is a lot. And so they need to make sure, and you need to ask. In fact, I had a tenant their agent asked us, who's their attorney that protested? And we were able to provide them the name of the attorney that protested taxes.
The other thing that's important too is to find out what exactly they're rolling into their common area maintenance expenses, just to make sure that they're not throwing in random bills into that cost.
Did have a question about somebody looking to renew their lease for their existing space. What's the best way for them to approach their landlord to negotiate a more favorable lease for themselves? Say like there's some, you know, maintenance issues that need to be addressed.
Here's a couple of things. I'll give you an example. I have a tenant or a client that approached me about a very similar thing. They're a restaurant owner, and they had been a good tenant. They had paid everything on time. They had done everything that a good tenant should do. And we went back, and he contacted me, but we went back to the landlord, and I said, look, this is what you need to tell the landlord. And so he approached the landlord with that in mind, saying, you know, I've complied with everything. We've been good tenants. We've been good neighbors. You know, we service your place very well. He says, but I would like to stay, but here's a couple of things that I would need from you in order for me to stay. If you've been a good tenant and the landlord doesn't want to lose you, because it's going to take them, keep this in mind, it's going to take them months. In San Antonio, for sure, a vacant space stays vacant for a minimum of 6 months. That's the average. And it can stay vacant up to 12 months. That's a big loss there, okay? And so I think you approach them from that standpoint and say, you know, love to stay, but I'm asking you to help me out with this. This restaurant owner went back to the landlord. It was a big landlord, I have to admit that. They actually ended up getting TI to update the restaurant. And they ended up signing another 5-year lease. But they were able actually to get some money that helped them out to put in some new carpet, to paint and things like that. If you're talking about plumbing or anything kind of issues, I mean, that's certainly something that you can ask for and say, look, if I get this taken care of, would you be willing to pay for it? You know, and get that in writing. But I think you have to approach it from the standpoint that I've been a good neighbor, I've been a good tenant, you know, I paid everything on time, love to stay here, I like this place. How can you help me?
All right. Well, that is all the questions that we have at this time. Does anybody else have any other questions? If not, well, thank you very much, Marcelino and Leslie. It was very great. Everybody is saying thank you in the comments, and so really appreciate your time. I know I've learned a lot, and it's going to help me when I work with the businesses here in Seguin as well. So,
well, we only apologize that it was so dry.
Oh, no. I found it very educational. So I appreciate y'all's time, and that will wrap up today's webinar. We hope that you'll be able to join us for tomorrow's webinar, which is going to be the future of small business. So we will see everybody tomorrow. And once again, thank you to our sponsors, GBC and Eardners Pierce Realty. And thank you very much, Marcelino and Leslie. Y'all have a wonderful afternoon.
Appreciate it.
Thank you.